The Nasdaq 100 broke through the key 14,765 to 800 level on Monday, driven by the Ukraine-Russia headlines like this, whilst Tesla also contributed after announcing a stock split. I mentioned in my last video how price would run up to the 200-day moving average around 15,230 if this level broke above. Look at what happened. Price hit the 200-day and has since come off. I mean guys, if you've not hit that subscribe button yet, what are you waiting for? What this daily chart shows us is that the 200-day moving average will now act as firm resistance, hence the pullback we're seeing. Now the positive for bulls is that price has reclaimed that third breakdown, which is the trend line in black, which comes from connecting the lows from January and the third breakdown here highlighted. Now if price holds the 14,900 to 940 area, that would confirm the breakout. However, if price dips back below, we could be looking at a bull trap, i.e. a false break. I would remain cautious if you're holding on to longs after this snapback from the 200-day. If we lose 14,900, the next area of support is around 14,705 to 770. Below that, and it's onto 14,400 to 440. So to summarize, the upside levels to watch are 15,230 being the 200-day moving average. On the downside, support levels are 14,900 to 930, followed by 14,765 and 14,400 to 440. The key will be confirming this week's breakout to the upside, so keep a close eye on that. Switching focus now to commodities and crude oil. I mentioned in the last video about keeping a close eye on this 106.20 level and how price would come back this week to retest that with a bias towards the downside. On Monday, we not only got that retest, but price broke below. Since then, price has tried to reclaim on a couple of occasions, only to fail. This level is key because the longer we remain below, the more likely the selling accelerates and we turn sharply lower. The first level of support is around 97.70 to 98, followed by 92.80 to 93.60. The risk remains to the downside, particularly after OPEC Plus agreed to raise its outputs by 432,000 barrels per day from May, and on news that the US is planning to release up to 180 million barrels of oil. To finish off, a quick update on the dollar yen. Now looking at this daily chart, price had an overshoot with a spike to 125 this week on the back of Bank of Japan pledging to buy unlimited bonds for 4 straight days to cap yields. However, this didn't last long as prices come back crashing down. I'll reiterate that a retest of the 120.70 level is very likely. What you've also got, looking at this weekly chart, is a major topping tail on the dollar yen, suggesting that a high of 125 is likely to stay as the high. If price did get below 120.70, 119.60 would be the next support level, followed by 118.80. Bias remains to the downside on this one. I mentioned on a previous video how the 10-year and the dollar yen are in sync, and it's no coincidence that the 10-year yield has come off with the dollar yen retreating too. So it's important to keep one eye on yields if you're trading the dollar yen. As always, if you'd like to learn more about technical analysis and how I come up with the levels along with my trade plans, come and join the trading community at Level Traders, where you'll get access to the live trading chat room and my daily blog. With that said, if you're getting value out of these videos, remember to hit that subscribe button so you don't miss future content, and I'll see you at the next one.